Stocks languish in range trades in the absence of a big trigger. Metals stand out on gains, while IT and utilities are the big drags. ICICI Lombard slips on missing growth estimates and taking a cautious stance on motor insurance, leading analysts to trim targets. But the company tells CNBC-TV18 it will gain from the new IRDAI expense norms. Glenmark Pharma perks up after it settles an antitrust drug matter for $48 million, while Piramal Pharma gains on successful completion of a US FDA inspection of its US Sellersville unit. And strong growth in China's auto sector drives metal names higher, with aluminium seeing strong gains overnight. Hi guys, good afternoon and welcome to Business Lunch. I'm Pavitra. Those are all of the top headlines that we're tracking this afternoon. For the markets, it's absolutely flat. Has been pretty much an very dull kind of day as far as the trading action goes. For now, we did see a little bit of a move into the green, but we've slipped back right now. So just around 5 points in the red for the Nifty. What's encouraging once again today, and we have been talking about this trend, for the past couple of days, is the fact that the broader markets are doing better. So the mid-cap index is up around 0.2%. You have the small-cap index also on your screen, around 0.3% higher there. So that outperformance really continues. And on the back of that, you have the advanced client ratio, which is looking pretty positive right now, around 1,700 stocks gaining for 1,100 which are in the red. So that's looking pretty positive. In terms of the specific sector action, it is really the metals which have it today. So we'll talk more about that. But for now, names like Tata Steel, JSW Steel all holding up well. You also have the auto pack, which is doing very well. I mean, anyway, this is a sector which has seen a 6.5% move this month, right? But once again, you're seeing good moves come through in names like Bajaj Auto. That's up 1.5%. On the downside, it is once again all tech, and we're seeing that selling pressure only intensify. So Infosys, HCL Tech, TCS, these are some of the larger names which are seeing cuts come through. But also the mid-cap IT names. So take a look at an LTI, Mindtree, you have Emphasis. All of these also seeing cuts come through. But like we were pointing out, on the surface, it's extremely flat, but there's lots going on underneath the surface, and we have some stocks which are surging in trade. Zomato is one such. This after the company makes some changes in the payment structure. Mangalam is here to take us through what has changed and why really it is good for the stock. Mangalam.
Well, Zomato is doing well in today's trading session, mainly because the company has now officially recognized that it's made changes to its payout structure for delivery partners of Blinkit. Remember, the last couple of days, there were a bunch of delivery partners protesting that. I'll talk about more that in just a bit. But the thing is that, because of this, they had to shut down a few of their stores. The company is saying that now all those stores have resumed operations. In their overall scheme of things, this accounts for less than 1% of their revenue, which is why they didn't, have to explain it to the exchanges unless asked. So as a result of which, materiality is very low. Now on to what has changed as far as the payment structure is concerned and why there were protests. So the payment structure for the delivery partners for Blinkit earlier was 25 rupees per delivery flat, and now it's changed to variable 15 rupees plus a percentage basis the distance that the delivery partner travels. So, the delivery partners weren't happy with this because they thought they would get lesser. But ICICI Securities believes that this is a positive for Zomato for a couple of reasons. One, it increases the delivery radius of every dark store. And secondly, helps the company's Blinkit business go ahead and expand its network without any significant capital investment, using the new payout structure itself. So that's a positive for Blinkit. But over and above all these things as well, a lot of brokerages have been sounding positive incrementally on Zomato over the last few trading sessions. In fact, Motilal Oswal recently initiated coverage on the stock, citing good tailwinds for the food delivery industry itself. And as a result of which, the stock doing well today.
Doing well today. At the highs, it was up over 4%, right? It's come off a little bit, but still holding up with a gain of 2.5% in a very flat day of trade. But some more stocks that we're tracking on the back of good moves coming through or on the downside as well. And we have ICICI Lombard, which is seeing some cuts today. This after it reported a weak set of numbers. So the net earned premium grew below what was, really expected by the street. The loss ratio was also expanded, whether you look at the motor segment or the health travel segment. So we got in touch with Gopal Balachandran, who's CFO and Chief Risk Officer at ICICI Lombard, and he outlined the measures that the company is really trying to take in order to bring down its combined ratio and then to also drive growth. So listen in to what he had to tell us.
So there are multiple levers that we kind of work with. Clearly, in terms of increase in pricing is one of the levers that we kind of largely look at. For example, on the retail health, this February we have kind of effected a price increase of about 19% on the renewal part of the health segment. So therefore, pricing is definitely one of the levers that we have. We equally look at actively focusing a lot on claim service efficiency, because that typically forms the bulk of the combined ratio breakdown if you were to look at. And third, and more importantly, we will continue to make our investments in various areas of expanded distribution, but early signs of success of those investments translating into incremental revenues is already something that we are seeing. Over the last 15 years, the market has compounded at 15%. And given the opportunity that one is seeing, even in terms of the road forward, particularly when you look at, let's say, FY24 or beyond, we believe the market should continue to grow in the range of 15 to 20%. And from an ICICI Lombard standpoint, we would obviously want to see a similar kind of maybe beating the market by maybe 1 or 2 basis points over the market growth rates from a revenue perspective.
All right, that is the word coming in from the ICICI Lombard management. The stock, however, continues to reel under pressure. It's actually at the low point of the day, over 4.5% in the red. Another one that we're tracking and that is under pressure is Angel One. This despite a strong set of fourth quarter numbers. So earlier today, we spoke with Dinesh Thakkar, who's chairman and managing director at Angel One. And he says that the company plans to focus on growing its market share and not on the cost to income ratio. So listen into some of those comments as well.
We are not focusing more on improvising our cost to revenue ratio, because we want to focus more on market share. So this time it was better because there was one reversal of ESOP cost, which was not a big amount. But primarily what I wanted to say is that we are into kind of an investment mode, where we would be focusing more on getting market share or getting more wallet share from a customer. Impact on our profit and loss would be around 40 crores because we have to raise more capital. What I believe this industry would be growing at a far more better rate than what it was in FY23. FY23 was very lackluster year. So I'm expecting this growth would be better next year. And based on that, I'm expecting industry is going to grow higher than what it grew last year. And always we have been gaining market share. So overall, I see a lots of kind of like positive growth in coming years also.
All right, that is on Angel One. The stock is down around 3% today. But remember, this is a stock that has run up a lot in the past 1 month. So if you look at the 1 month move on this stock, it is up around 17%. So do keep that in mind. That is on Angel One. But with that, let's move on and talk about a very interesting piece that my colleague Surbhi has put together. This is a roundup of some very interesting details that we've seen on investor behavior of late. So Surbhi is standing by the big wall. Surbhi, take us through what the recent trends have really looked like in terms of investor participation.
Well, March data from the exchanges and depositories is throwing up some pretty interesting investor behavior trends. First of all, the trend of new demat account openings is slowing down. Now, though the total number of demat accounts continues to rise at an absolute basis, the incremental new account addition is what is seeing that drop. March actually saw 19 lakh new demat accounts being opened as opposed to 21 new lakh accounts being opened in February. In fact, this trend, you can say the decline has started in January after having a decent end to the year. The number is also well below the monthly average of 29 lakh new demat account openings that we saw throughout FY22. So if you average out every month of FY22, then we were at 29 lakhs. That number for March is down to 19 lakhs. So that tells you about the pace of the decline. Now, lackluster markets are probably the key reason behind this drop in fresh demat account openings. And that could also be the factor behind the steady decline seen in NSE's total active client base, which has been falling for 9 consecutive months, according to Motilal Oswal, and it's come down to 326 lakh accounts in March. Now, mind you, even though the number of NSE active clients is almost down 9.5% in March of 23 versus last year, discount brokers aren't complaining. Their dominance actually has been growing steadily throughout the last 1 year, with the top 5, that is Zerodha, Upstocks, Angel One, Grow and 5 Paisa Capital making up now for 60% of the market share. Let's come to another interesting trend, and this is retail investors, or should I maybe say retail traders, increasing their interest in the futures and options market. Let's look at the basic turnover trends to begin with. Now, despite the market remaining absolutely flat over the last 18 months, average turnover has been pretty healthy. In fact, it's up from 95 lakh crores in March of 22 all the way up to 236 lakhs crores. That's almost 150% jump in that 1 year period. Now, this is largely courtesy the rise in F&O volumes. Let's look at the average daily turnover in the F&O segment, which is up in March 148% over last year, and it's a 13% increase compared to February 23. It's not just seasoned traders, but retail has also decided that it doesn't want to miss out on the F&O opportunity. Motilal Oswal points out that retail segment average daily turnover has grown about 12.5% in March over February, the month-on-month growth if you're talking about Feb 23 and March 23. But the more stunning comparison is on a year-on-year basis. If you look at the average daily turnover in the F&O segment, retail turnover, then we're talking about a massive jump. From a level of 40 lakh crores in March 22, that number has moved up to 87 lakh crores in March 23. Contrast this with the cash market activity, and cash market retail volumes have actually dropped in the same period, the year period, by a little over 28%, and they've come in at about 237 lakh crores. So there we have it. It's quite clear that the retail investor is willing to experiment with newer ways of making money and is perhaps heading from the cash to the futures and options market.
Surbhi, thanks a lot for that. Very interesting data coming through on how retail investors have behaved, especially in this post-COVID period, right? When after the time that we saw exponential gains, but perhaps in a market that's looking as lackluster as this one, they are willing to take some new bets and move to the F&O segment like Surbhi was pointing out. But that's what we're tracking in terms of participation. We are going to get into our first short break on the show. But on the other side, we're also getting some very contrasting commentary coming through from some members of the US Federal Reserve. So stay tuned. We're going to wrap that up for you when we come back. Welcome back. You're still tuned into Business Lunch. We've slipped once again around 30 points in the red right now. So we're really facing some resistance at that 17,660 kind of levels. So we were absolutely flat, moved into the green a little bit as well. But once again, it's been a 30-point drop from that level like you can see on your screen. So that's the market for you. But let's talk about the US as well. We saw quite a mixed close after a volatile session yesterday. Now, this was following a bit of contrasting commentary which came through from some key Fed members. So St. Louis Federal Reserve President James Bullard said that he believes the Fed should continue raising interest rates. This as data indicates stubbornly high inflation, along with the broader economy also, which continues to remain strong. He also has raised doubts over the idea that a recession was coming in the latter half of 2024. So that's important from James Bullard. Meanwhile, we had Atlanta Fed President Raphael Bostic, who told CNBC that he favored raising rates only one more time and then holding them above 5% for some time to understand the extent to which inflation was returning to the Fed's comfort and target area. So let's listen in to those comments.
After the next move, if the data come in as I expect, we will be able to hold there for quite some time. Now, I've been saying for a while, I don't think that inflation is going to come down quickly. It's going to take some effort and a resoluteness on our part. So once we get to that point, I don't have us really doing anything but monitoring the economy for the rest of this year and into 2024. Part of this is really about the pace of inflation's returning back to our 2% target. I don't think that's going to happen as quickly as some of the markets do. And it seems that the question is, who's right on this? I think that we've made a lot of movement in the last several months, but now the hard part happens.
All right, that is some contrasting comments coming through from Fed members. But since we are talking about the US, let's also talk about some of the bigger earnings which came through. We had Netflix, which added fewer customers than expected in the first quarter. They've also now delayed the launch of its password sharing crackdown that they'd spoken about earlier. So if you look at the numbers, the streaming giant has beaten estimates on the earnings per share, but it has fallen short of estimates that came through on the revenue front. So the revenue came in at $8.16 billion, which is below what the street was expecting. We have CNBC's Karen So, who's here to break down all of the numbers for us.
Blockbuster moves in Netflix shares, which did recover some ground after falling as much as 12% in after-hours trade after delayed a crackdown on account sharing to the second quarter. The streaming giant posted earnings per share of $2.88 on the back of $8.16 billion in revenue for the period. That was a beat and a miss, respectively. It also added 1.75 million subscribers. This is the first earnings report since Netflix stopped providing subscriber growth projections at the end of last year. A CNBC analysis shows that while Netflix continues to add subscribers for revenue growth per customer is actually slowing on a constant currency basis as the US firm cuts prices in some markets. Netflix co-CEO Greg Peters set out the reasoning behind the delayed anti-account sharing measures on the earnings call.
This is an important transition for us, and so we're working hard to make sure that we do it well and as thoughtfully as we can. This last set of country rollouts have gone well, and maybe most importantly, we're directionally consistent with what we saw in Latin America. So just to remind people what that looks like, very much like a price increase. We see an initial cancel reaction, and then we build out of that, both in terms of membership and revenue, as borrowers sign up for their own Netflix accounts and existing members purchase that extra member facility for folks that they want to share with.
All right, so that is on Netflix and how they fared in this quarter. But staying with big tech, in March, remember, Mark Zuckerberg announced 10,000 additional job cuts for Meta. This after 11,000 layoffs had already been announced last November. So overall, layoffs in the tech industry have now surpassed a whopping 1.7 lakh. And now there are reports that Meta is likely to hand out another set of pink slips starting today. So Kanishka Sarkar is here with all of the details that we know on this so far.
Right. We've learned from multiple sources that Meta is going to begin its latest round of job cuts starting today. Though CNBC-TV18 is awaiting an official confirmation from Meta and inputs on the detailed impact, several employees have told us that the buzz about April 19 is being called the D-Day. Another source has also said that employees at mid-senior levels will be notified about the layoffs this week, while layoffs in leadership roles could happen next week. The Washington Post has seen an internal memo by the HR head informing about the job cuts. However, employees in India tell us that they have not received any official communication so far. According to the Washington Post, divisions that will be affected include teams working on Facebook, WhatsApp, Messenger, Instagram, and the virtual reality division, Reality Labs, among others. It must be noted that last month, Mark Zuckerberg had announced that Meta would implement another 10,000 job cuts after it laid off 11,000 employees, or 13% of the company's workforce, in November 2022.
All right, Kanishka, thanks a lot for bringing us all of the details on this. So likely to see another round of pink slips being handed out as far as Meta goes. And, you know, the layoffs in the tech space really just continuing. But that's what we're tracking as far as some important details came through from the U.S. markets. But with that, we are also going to get into a short break now. On the other side, we're going to bring you some inflation data coming through from the United Kingdom. So stay tuned for that. Welcome back. You're still tuned into Business Lunch. Now, some important news. The Supreme Court resumed hearing a bunch of at least 15 petitions regarding the legislation of same-sex marriage in the country. Yesterday, the court pushed for equality, observing that society is evolving. So let's go across to Ashmit to take us through all of the proceedings. Ashmit, take us through everything that went down in the two-day hearing.
Well, the hearing, we understand, is still underway. What's important to note is that the centre has made yet another fresh submission before the top court, where they've said that even the states need to be made a party to these proceedings. The rationale being that this is an issue that every person, that the popular opinion should be taken into account, and therefore the legislatures of not just the centre but also the states need to be borne in mind. Now, what's interesting is that the petitioners shot back, saying that merely because the issue finds a mention on the concurrent list does not automatically mean that the states will also have to be heard by the Supreme Court. Mukul Rohatgi, in fact, for the petitioners, went on to even point out that this matter has been pending for 5 months, but it is only now that the centre has chosen to come forth and mention the need for states to be taken into consideration. Nonetheless, the Apex Court allowed for the petitioners to argue their case. Mukul Rohatgi, arguing in the first half today, argued that rights to love is an essential feature of a free society, went on to say that the centre, far from opposing the demand for same-sex marriage, should in fact be assisting it, because the centre constitutionally has been mandated to ensure equal rights for all its citizens. In fact, the petitioners also pointed out that even despite the Section 377 verdict, the centre, even at that time, had not supported decriminalizing, and that is a sad fact, and further went on to say that the centre is seeking to impose Victorian values on a country that boasts of temples such as the Khajuraho, which have engravings which clearly depict that the LGBTQ phenomena is not a recent urban or an elitist concept. That was the argument being made. Now we understand the arguments are likely to continue. They will be extended further by Abhishek Manu Singhvi appearing again on behalf of the petitioners. Back to you.
All right, Ashmit, and we trust you to keep bringing us all of the details on that one. That is the latest on this very important hearing that is underway right now in the courts. But with that, here's also some important global news that we are tracking. Over 185 people have been killed and at least 1,700 injured in a matter of just 3 days of fighting between rival factions in Sudan. So the regular army and the rival paramilitary rapid support forces accused each other of violating the ceasefire. So several people are stuck indoors now with no access to even basic amenities like food, water and electricity. In fact, the UN has described this as a humanitarian catastrophe, and also do know that 31 Indians are stranded in the conflict city. So that's what we know on the Sudan crisis. We will keep bringing you any more updates that we can find on this through the day. Another update that we are tracking, and this is from the world of sports and football in specific, if you are interested, that is that Real Madrid got through to yet another semi-finals of the Champions League after beating Chelsea by 2-0. After a less than impressive first half, Real Madrid stepped up in the second half to kill the tie with 2 goals from Rodrigo. In the second quarter-final, we also saw AC Milan, who edged their way into the semi-finals for the first time in 16 years after winning the tie on a 2-1 aggregate score, as Napoli, despite a strong showing, failed to overcome a 1-goal deficit from the first leg. So that is some very exciting action coming through from the world of football. And with that, we're out of time on this edition of the show, but I do have to point out that the market has slipped around 30 points like we were telling you. So not much going on. It is a very flat day like we've been telling you, but the good part is that the broader markets are holding up. There you have it on your screen. We very briefly moved into the green a little bit, but could not sustain at those levels at all. Once again, we've seen quite a slip come through. 17,632 is where we are at on the Nifty. So I'm going to wind down on that note now. But you guys stay tuned because Midcap Radar comes up next, and they're going to take all of this market action forward.